Let's kick off then, perhaps with an electronics division that impressed. You look ahead to the first half of 2019. How much more upside can you lock in?
We're probably a low double digit for the next year.
Low double digits for the next year. So the smartphone sales help drive your electronics segments. Talk to me more about some of your margins. I mean, they remained largely flat at 70.5%. How would margin expansion shape up to be in the coming quarters? Where do you see that going?
We think it will improve. We have added some products like smart TV, and we have as well improvement in margins with some of the vendors on the smartphones, including we have opened 9 Apple stores inside our stores.
We were speaking to the CEO of United Electronics at Extra, and he was saying that 2018 has been an exceptional year. There are a lot of new laws that were kicking in. Consumer confidence was affected. I mean, do you agree with that? Is the road ahead going to be quite a bit easier than the road that you traveled on this year?
Yes, I think we have seen a bottom on the first quarter, the second, and some growth on the second quarter as well as on the third quarter, and this is like for like, and we do expect this to continue. There has been a dislocation a couple of years ago because of the oil prices and consumer sentiment, but we're seeing some positive signals in different departments as we go.
We were speaking to some of the analysts, and you've clearly been able to adjust your product mix in line with the behavior of consumers. Can you give us a bit more context and color as to how consumers are likely to change in the coming year or two?
We are seeing, of course, a big growth in our e-commerce. So we're seeing some big change. It has grown over 150% this year. Our run rate today is close to 5%. We'll accomplish 3% for this year in the e-commerce. So we're seeing some change, and people are really moving to e-commerce. But we're also sharpening our pencil. We have improved our supply chain, and we think we are trying to adjust and provide better prices and better offerings to our customers. And so we're seeing some good signals. We have also seen some signals that, that basket size is starting, okay, it's been negative slightly, but the traffic has been very good. Over 7% has improved on like-for-like stores.
One of the key downside risks that a lot of analysts point to is rising competition, especially in the e-commerce space. Souk.com, Noon.com. How do you mitigate that threat?
We have to do a better offering. So this is really it's only one way, and I think we have improved, and we are right now we are number 2 in terms of customer acquisition after Souk.com, Amazon, and so this is really a very strong signal, and the growth has been 150. We are going to have more fulfillment center, and really people can move between the brick and mortar as well as the e-commerce very easily.
With the strength of your balance sheet, Mohammed, is it perhaps time to look at acquisitions, perhaps expand more aggressively outside of borders of the kingdom?
Yes, we are not excluding any acquisition. We are also doing restudies for some of our future expansion in North Africa, and we are also expanding, and we continue to expand in the Gulf. In the Gulf, we have been continuing to expand in the Gulf. On the other hand, we are also trying to. We have been going to smaller towns, which have been very feasible for us, and largely we will probably do over 75% expansion in Saudi Arabia going forward for the coming 2 to 3 years, and 20 to 25% in the GCC. From there, we will probably have to move to. We expect to move some to other countries.